Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into discussing about what's impacting mortgage rates and what sometimes might come from the economic calendar. It could come from headline news or geopolitical combination, and sometimes even the market sentiment changes where now good news is now bad news and vice versa. And that could be a little confusing for a lot of people. We're trying here to give explanations as to what's behind those scenes and what's going on and why mortgage rates are doing what they're doing. A little bit about myself is I'm a loan officer. I do work with the national lender. We do loans in all 50 states. So if we can help you with your loan needs, whether it's refinance or purchase in any state, we're here to help you guys out. So, but more than that, we like to be a resource. We're here to help you guys answer any questions you might have. So, if you have anything, pose any questions, please again pose those. We'll get back to you guys as soon as possible with some type of information. We appreciate you guys. So to begin, why don't we start off with the economic calendar today? We do got a minor report that comes out every Wednesday, which is brought to you by the MBA, and that which is Mortgage Bankers Association. It's their mortgage loan activity report, and it lets you know on the purchase side and refinance side if loans are up or down. So as we can see here, purchase side, we do see a slight uptick in purchases, which is obviously good news. We are getting into the buying season of spring. However, with the higher rates, we are seeing a pretty big drop off in refinance here. So people who are refinancing now are probably those who are looking to take equity out of the property and for whatever needs that they may have, like cash out refinances. So the big report today we'll start off with, it will be the ADP report. This will be our first of the jobs report we'll get this week. Tomorrow we'll get the initial jobless claims. And then Friday will be the Bureau of Labor Statistics data for the month of March. Uh, so last week's last report for the month of February was revised slightly higher from 475,000 people to 486,000, which is obviously good news. However, forecast was calling for 450,000, and it came a little bit higher. So actually, uh, didn't mean however, but we got good news overall for ADP. Now, this is a report that doesn't get a lot of respect, primarily because it doesn't always translate to what we see on the Bureau of Labor Statistics. That is the main report we'll look at, and that will come out Friday. So it'll be a big report to come look at. Now we also got the final GDP for the month of or Q4. The previous it was initially came out at 7%. So forecast accounted for uptick of 7.1%. However, it dipped lower to 6.9%. So the final GDP comes in at for Q4 comes in at 6.9%. Of course, a lot of that is pent up activity due to the pandemic. So a lot of activity that was getting pent up, that was there. Of course, real estate was another big thing that propped up the GDP. GDP we would expect probably come down a bit, especially now higher rates are coming in and low inventory, so we might not see as much in GDP going forward. So just stay caution with that. And so that's pretty much it for that. Um, we'll take a look at mortgage-backed securities. The headline news today really is kind of what's going on with the uh, again, what's been going on for over the past month, which is Ukraine and Russia. Yesterday there was talk about possible peace, and Russia was going to pull back on a couple of cities, including Kiev, fundamentally pull back as a quote fundamentally, and to show some trust there. But it sounds like there was some renewed fighting again in those areas, so that trust is no longer there, and of course things are back to square, which yesterday it brought down oil price, which helped us out dramatically. We jumped up I think we ended up closing up mortgage-backed securities up 48 basis points, as you can see right here. We ended up closing up 48 basis points, which helps us out with our pricing. We did have a price improvement yesterday, which is good news. Today we're up 25 basis points, which again means that our pricing and our rate sheets are looking better today, which is obviously very good news for those who are in the market for refinance or purchase. So this is helping those folks out, so they're not hopefully hitting the bottom there of those where the rates are at. So good news for there. A lot of it has to do with stocks are in the negative territory. Uh, Oil subsided yesterday because they thought, with the transactions and inflation might subside a little bit if there is peace. However, it's slowly subsiding, and a lot of that is kind of going away. So stay cautious because inflation is the worst enemy for mortgage-backed securities or bonds and yields and treasuries. So because they spread over like a infinite time or a finite time period, like bonds or 30 years, inflation erodes that value over that time. So this is why it's so important that we try to get containment of inflation going forward here. So hopefully it may be overperforming today, so we have to kind of watch and see how this stays. So be careful if you guys are floating or anything out there with your mortgage rates currently. All right, so as you can see, it just did a slight uptick to 27 basis points. Here's kind of volatility. We're down earlier and then jumped upwards right around 6:20 a.m. and then jumped upwards, and then we've been kind of slowly kind of coming down a little bit, but not too bad because we're up about 30 basis points at one point, and then kind of subsided back to around 25, 27 range here over the last 30 minutes or so. So we'll bring that back. And then yields, yields have dipped down lower, which you can see here by the chart. It dipped down quite a bit yesterday, and then today we're down to about 2.35. So we're getting kind of closer towards pre-Ukraine levels, but again, we won't get there until we get more definite course. I mean, if we get there once we get some, once we get that resolved, hopefully they can get those resolved and get some peace accords there. Of course, the big concerns are if this could escalate even to further wars with more countries and stuff. So hopefully, again, our thoughts and prayers out to the families are affected there. And let's move on. Our last but not least is our average rate for conforming loan limits. 30-year dipped down to 4.88% and 15 years at 4.22%. These were higher, as you saw, as last few days, and they have dipped down slightly here, which is obviously good news. So again, these do have points built in there. If you guys like to get your rate quote, please reach out. We are here to help you guys out. We can certainly give you a rate quote if you would like one. In the meanwhile, if you guys like these videos, please help us out and smash that like button. We do greatly appreciate that. Greatly appreciate you guys, and subscribe and share us. Any help you can spread us out, we greatly appreciate. Thank you so much. We'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye bye.